Hey guys, it's Adam. I'm back here with another video. I'm going to go over the ES and NQ chart. I know I have not made a video in the past few days, but that's because market's been choppy and I just haven't been as focused as I'd want to be on the markets. I've had other stuff going on with businesses, but the market just has not been in great conditions that I really want to partake in. So I kind of took time away to focus on that. But looking at price action, what happened today that I did trade, I'm looking at this area from here to here for the possible void to be reached up into. And on the weekly time frame, we are looking at this breaker that we have within here and also this fair value gap that we just traded back down on into within this range. So in the weekly time frame, this is just bullish order flow. We're going bullish, bullish, bullish. Weekly time frame came down below last week, and now we are possibly gravitating higher towards the strong liquidity. My focus is higher. That's where my focus is. And ICT always says the entry is the easy part. Don't worry about the entry. Worry about where is the draw on liquidity. I believe it's higher, going higher up into the higher part of this range because it's already bullish order flow. So we took out a lot of people that are already going short, okay, up within this area. They short. Now we're going to take them out that are going short again. So we took out the people that are trailing their stop loss below these lows. Boom. 50% of the daily gap traded down and into, started to trade away with energetic movement. 12-hour time frame comes up, retests down into this fair value gap, and then trades away. And now we're just watching to see if we want to get up to this new week opening gap, these dates that I have up here. So we have that now. 4-hour time frame, just look at this price action coming up, consolidating. Very, very choppy, very choppy. Kind of choppy. Not really liking this. This isn't great movement. And the movement here didn't even happen until like later on anyway for this leg up higher here. So it's kind of choppy even though we did expect it, because if you're looking at this entire sell side down, we came to the daily fair value gap, we start to trade away. So I can actually go over this too. I know this was earlier in the week when I was looking at the chart. I just didn't make a video on it. We did trade down below, down into this area. And now look at all the buy side up here. Buy side, buy side, buy side, fair value gap, buy side, buy side. New week opening gap up there. There's a lot of PD arrays that price can reach up on into, okay? So we trade up into this area right around the 11 o'clock hour, starts to trade away, retest the high after a bullish closure, the shift in market structure above this high. We trade down, and then we start to trade up into the higher part of the range. 15-minute time frame, boom, boom, boom. Order block, trades away, okay? There's entries within the lower time frames within there. But that was very, very nice in price action in the lower part of this range. But still, a lot of chop for the times I like to trade. Because it did come to be around 11 o'clock, 11:15 is like really kind of like where I step away. 11:30, I'm definitely not at the screen much anymore. I go and do my other thing. But then we came up, we consolidate again. Just a lot of chop in here. Really not that much. All right. Comes back up into this area, comes back down, taking out the sell side liquidity. And I was looking for lower pricing here, but then we ended up shifting back up. We never got really bearish closures on this. Like nothing here is telling me it really wants to go lower. It looked like it wanted to from this 15-minute fair value gap, as you can tell. If you look at this 15-minute gap from here to here, draw that out. I'm looking for some type of shorts because this is today. This is what I was trading today. 5-minute time frame. You come down into here. Not really that much either. I mean, it started trading back down, but we never got that bearish closure down below. And I'll go over NQ in a little bit, and I'll show you where I actually had a loss. And then later on, I took the buy back up, and I made back most of the loss that I had this morning. Not quite. Most of it I did. So I did end up negative on the day, but that's fine. But looking at price action, we did come down, came back up, and after we got that 5-minute bullish closure here, and we closed up above the opening range closing price, and we started getting the bullish inversion closures. I believe they're on Nasdaq. We could see them a lot better. But looking at price action, came back down below, swept this low, and we could be looking for shorts here if we did want to go short. But we have this whole gap that could be traded back on into. We are not ready. This is just not a setup. It's not part of the model that gets you ready because it traded down. Higher time frame PD array, which is this fair value gap, trades back up on in. We had bullish SMT, I'm pretty sure here with NQ. So let me pull that up so you guys can see it, because this is very, very key when looking at setups like this. Notice we make a lower low here, but we make a higher low here. So that's bullish SMT. You would not want to short something like that. Not financial advice, but personally, that's not what I would do. Trades back up on in, just consolidates within here. We got this order block now. Using this order block, draw the order block out, 1 minute time frame. You can look at this order block here. At the same time, we're looking at NQ in this range, and we want to go short. That's like what I was looking at here this morning, but we need to continue down and have bearish closures within this fair value gap to make it an inversion, but that never happened. So we trade up, down in here, and then we come back down, a bearish closure right there. So we're making a lower high here. Notice that. We get a lower high, but over here, making a higher high in this fair value gap, bearish closure, this wick retest here. So opens here, trades down, comes back up, opens here, wicks up, boom. Entry after that bearish closure right there, trades back down below this range in the opening range, opening price in the fair value gap, and looking for lower pricing, which would then be a break even. I personally did not take that. I looked for the short here on Nasdaq a little bit before. So I was looking at this confirmation. We traded up into this fair value gap here. So we came down, shifted the structure, came back up into the fair value gap, traded down. So I'm looking when price came down into this area. I'm also looking at the 2-minute time frame here. I'm looking at the new week opening gap right here. So we closed down below the new week opening gap, and also the 1-minute time frame, the one new week opening gap. So when we came down and retested that new week opening gap, I expected this new week opening gap from here to hold price and price to not come back up above this area. And I was targeting way back down in the lower part of this fair value gap, all down below these lows, down into this gap down here, going for a nice 3.5 to 4 to 1 about. That's what I was looking for this morning. Hit me out. That's completely fine. Came back down and then came back up into this area and then traded away from this area. So now we're looking at this again. We shifted down. So now we have more bullish SMT. So we're making a higher low here, lower low here. We come back up, and then we have this fair value gap inversion. So this inversion fair value gap right here. Bullish closure above the inversion. Boom, green light. Bullish SMT. Shift market structure above this short-term high, above this short-term high. Bullish closure. Retest into a fair value gap. Okay. 1-minute time frame. Fair value gap retest. Boom. Trades away. Trades away from that area. That's why it's so important to be focused and not get caught up in the price action of what it did, and we need to focus on what it's doing now so we can take advantage and not be emotionally distraught from the previous I wouldn't even say they're mistakes, the previous loss or whatever. So now we come back up, and I'm watching price. I wasn't watching NQ as much. I was focusing more on ES. I just like the ES chart a little bit better because we had the higher low. So I'm looking here on ES. We had that 5-minute closure. I'm watching the 5-minute chart. My eyes were on the 5-minute because I wanted to focus on that. We get a bullish 5-minute closure, and now I'm watching to see what we can get here. Okay, so I know we have buy side here, here, and then the 830 level up there to be reached, and then possibly this high, which was met later on, but I did not partake in that as well. But anyways, we come up, we close bullish here, and now I'm looking here on the 2-minute time frame. I'm watching this area, and now we have this bullish closure up above the opening range closing price, as you can tell here. So once we got our closure above the closing price, let's go into it right here. So I'm watching this chart, comes up, retests. So the 5-minute candle closed right here. And then we come back up, a bullish closure up above the closing price right here. Retest. So when it trades back down into the high of these breakers, boom, back up into this high, target hit. But once we get another closure above this inversion here, comes up, retest without taking this high, another entry, boom, comes up to the high, boom. You could have partials there, or you can just leave it open, reduce the risk from here to here. We shouldn't see it come back down and into this range. We should see this stay open. So now we reduce the risk a lot, comes back, trades back up, takes the high, partials, 830, there's the target, boom, that's it. That's it. And then it just kept going for a little bit and then came back down into the range. And then PM session had some more going on. So this is what we had here. So we shifted down during the lunch, shifted down again into this area, into a deep discount. We're looking at the 15-minute time frame. Notice how we have an order block right here. Boom, boom, boom. 30-minute time frame, order block. Draw this order block out. So if we are going to keep going in this bullish trend that we have, we do have a lot of sell-side liquidity. We go to regular trading hours, you can see there's a lot of liquidity down below as well. But we are not in the cycle of going lower just yet because of the higher time frame PD arrays. We are reacting off of the breaker, shift to market structure, boom. We're just going higher, just based on where the daily is as well. So we go back down here to this time frame, trade back down, shift up on in, and now we're at the new day opening gap. We trade down on in here, consolidate, You look here on the 5-minute time frame here on NQ as well. The same time, we trade down. We have the bullish SMT at these lows, so higher low here, lower low there. We shift up, retest, boom, 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 plays around, and then it ends up going higher for the rest of the PM session. So that was kind of a nice setup here as well. I was not focused on taking trades, but this is just what price action did. Traded down, came up within here, traded back down and into this range. That's okay, and that's what we're looking for. We're looking for that sweep down lower, okay? Down into here, we hit the new week opening gap here on Nasdaq as well, and now we reject off of this area. And now we're just watching price action. What can we do? What can we do to get in sync with order flow? Now, once we did that, we traded down, we came back up, we closed up above this inversion. So ideally, when we close up above this inversion like we did here with this candle, I would expect these candles to either hold it in this volume imbalance here on the 1 minute to hold price. So if I pull this up real quick, we have this 1 minute volume imbalance. I would expect this to hold, to go something like this and not come back down below this inversion. But we wanted to come back down into these volume imbalances. So ideally, this would be the PD array that would not need to be broken, which would be the new day opening gap, which is this blue box you have here. Targeting up to these relative equal highs, also the 830 level again. 830 level, met here, here, here. It's always a draw on liquidity. It reacts on price, okay? And that's all Eastern time. So we come back down, trade down into this area, and then it trades back up again. So now we're still in that inversion gap. We did not close down below it. We have this inversion gap now, still with the same bias. Our eyes are up here. This is our draw on liquidity up here, and we're going to focus on our draw that's up there. We close up above this inversion now, okay? And now, why not something like this? This is something pretty nice as well, giving us a nice little risk to reward above this area. Boom, targeting up within there. And look at the time frame we're in. We're in the 250 to 310 macro. And that macro just sends it right back up. Very nice. So we're just getting in sync with order flow. Liquidity, okay? Higher time frame PD array, order block, okay? 50% of the opening range right here. And then we shift up. We also have the midnight opening price. Shift up, trades down. So order flow is telling us we want to go higher. So now we just wait to get in sync with it. It's pretty simple. There's a lot going on, but we just have to get in sync with the order flow and then take advantage of a situation that does present to us. And we don't overtrade it, you know? You don't overthink it either. You sit down and you relax, and then you have no fear of missing out because you know what you need to look for, which is this. Inversion gaps. Okay, we trade up. Okay, wait for a pullback. If it pulls back, cool. If it doesn't pull back, look for SMT on like lower time frames like this. Like if we have SMT within here, but more bullish movement with another 5-minute bullish closure, then maybe we can catch the train on the ride up and then use 1 minute order blocks to send price up higher. But that was it for today. Pretty clean price action PM session. A little choppy in the AM. Not gonna lie. This was kind of annoying just sitting here for a few hours, not really getting much. Having the stop loss, but then me also thinking this was gonna keep shorting here as well. But the stop loss on NAS was, I mean, it was all right. It was all right. Whatever. We took another trade when another opportunity presented itself, you know? Just wait on that movement. Where's the draw on liquidity? And that's what we're going for. You know, keep your head up and then keep going. But gonna wrap this up here. I'm looking forward to tomorrow. I'm actually gonna check the news real quick when I'm on this video. I'll pull it over. So I'll pull over Forex Factory right now. We got our news tomorrow. Core PCE price index. So I'll be looking forward to that for 8:30 a.m. tomorrow. I usually don't trade until 9:45, so we get some volatility at the open, and then we can go from there. So our weekly profile, let's really see what we did all week. So if we started here on Monday. So Monday started here. All right, and we created the wick on Monday. We came down, and now we're going up Tuesday, Wednesday, Thursday. Let's say Friday, we've reached up a little higher, or even London, we go higher tonight. We could possibly get up higher in the higher part of the range and give us a wick at 20% of the range. So if we have this low, let's say we get up here, and then we want to get back to like 20% of the range. Do I have those marked up? I'm not sure if I do. Yeah, thank God it's Friday. So yeah, if we come up to this high, let's say this is the high, we're going to look for a 20% pullback. maybe even a 30%. I know ICT just taught that recently, but back tested it and it actually works out pretty well. So I'll be looking out for that for tomorrow for a possible pullback into the range, or I can get a continuation if we can get some more draws on liquidity for these daily gaps. So I'm actually going to mark up these gaps in the morning when I do my morning markup from here to here. I'm going to look at this area if price wants to get up in there or not. But I'm going to wrap this up here. It's a pretty long video, but take it easy, guys. Love y'all. Peace out.